If your spouse or common law partner passed away and you're between 60 and 64 years old, Service Canada owes you up to $1,702 a month, tax-free, every single month until you turn 65. And here's the part that should make you angry. Service Canada is not going to call you. They are not going to mail you a form. They are not going to knock on your door. This money sits there waiting, and thousands of low-income widows and widowers across Ontario, BC, Alberta, and every other province are walking right past it because nobody told them it exists. If you're 60 to 64 on a fixed income and you lost your spouse, this video could put over $20,000 a year back into your pocket. Stay with me because I'm going to show you exactly what this benefit is, exactly what it's worth, and the exact paperwork you need to mail in to start getting paid. I'm John AJ, and on this channel we break down real CRA updates and Service Canada rules for Canadian seniors. If you haven't subscribed yet, hit that subscribe button right now so you never miss an official payment update. Later in this video, I'm going to give you the exact form number you need, the income limit you have to stay under, and the mailing address that gets your first check moving. So don't skip ahead, because if you miss even one line on this application, Service Canada will send it right back to you. And that's another 6 to 12 weeks of waiting on money you desperately need. Section 1. Why this benefit exists and why it gets missed. Let's talk about why this happens, because I think a lot of you watching are going to recognize your own story here. When you turn 65, old age security kicks in automatically for most people. Service Canada has your birth date on file, they know you're a resident, and that check just shows up. Same with the Guaranteed Income Supplement. Once you're already receiving OAS, Service Canada usually flags you for it based on your tax return. But here's the gap nobody warns you about. If you're 60, 61, 62, 63, or 64, you are too young for OAS, full stop. That door doesn't open until 65. So if your spouse has passed away, or if your spouse is already 65 and receiving OAS and GIS, but you yourself are still under 65, you're stuck in what I call the income gap years. You're too old to easily go back to full-time work in a lot of cases, too young for the pension system, and if your household income is low, that gap can be brutal. That's exactly why the federal government created two specific programs, not GIS, not OAS, two separate benefits built specifically for people aged 60 to 64. And I want to walk you through both of them because depending on your situation, one of these applies directly to you. Now, some of you watching are already thinking, John, if this were real, my bank or my accountant would have told me. I hear this all the time, and I get why you're skeptical. Here's the honest answer. Banks don't track Service Canada benefit programs. That's not their job, and frankly, most bank staff have never even heard of this one. Accountants file your taxes, but unless you specifically ask them about allowance programs, it's not something that shows up on a standard tax return checklist. This benefit lives entirely inside Service Canada's Old Age Security Division, and unless you go looking for it or someone like me tells you about it, it stays buried on a government website most seniors never visit. Section 2, the Allowance for the Survivor A. What is it? Allowance for the Survivor ages 60 to 64. The Allowance for the Survivor is a monthly tax-free payment for people aged 60 to 64 whose spouse or common law partner has died. To qualify, you need to be a Canadian resident, you need to have low income, and since your partner passed away, you must not have remarried or entered into a new common law relationship. This benefit falls under the Old Age Security Act, and it's designed to do one thing: bridge the financial gap for widowed seniors who are too young for their own OAS pension, but need income support right now. I want to be clear about something because I know some of you are wondering, this is separate from any CPP survivor's pension you might already be receiving. The CPP survivor benefit is based on what your late spouse contributed into the Canada Pension Plan over their working life. The allowance for the survivor is completely different. It's based on your age and your income, not on your spouse's CPP contributions. You can potentially receive both at the same time, although your CPP survivor amount does count as income when Service Canada calculates your allowance for the survivor payment. B. What is it worth? Up to $1,702.34 per month, tax-free. As of the most recent quarterly update from Service Canada, the maximum monthly payment for the allowance for the survivor is $1,702.34. That's not a one-time payment. That's every single month, tax-free, deposited directly into your bank account for as long as you remain eligible, right up until the month you turn 65. Let's put that in real numbers. If you receive the maximum amount for a full year, that's over $20,000 annually, completely tax-free, meaning you don't report it as taxable income on line 15,000 of your return. For a widow or widower living on a fixed income in, say, Hamilton, Ontario or Kelowna, BC, that kind of money can mean the difference between falling behind on rent and utilities or actually keeping your head above water. Now, I have to be straight with you. Not everyone gets the full maximum amount. Your payment is based on your income from the previous tax year, and it works on a sliding scale. This benefit updates every quarter start in January, April, July, and October based on the Consumer Price Index, so the exact maximum can shift slightly from one quarter to the next. Right now, current figures show that if your annual net income is under roughly $25,000, you're likely looking at close to that maximum monthly amount. As your income rises above that threshold, your payment gradually reduces. Because these income cutoffs move every quarter, the safest thing to do is check the exact current threshold on the Allowance for the Survivor page at canada.ca or call Service Canada directly before you apply so you know roughly where you stand. Here's something a lot of people don't realize. Your OAS, GIS, and allowance payments themselves are not counted against you when calculating this income. And if you have money sitting in a TFSA, withdrawals from that account do not count as income either. So if you've been avoiding touching your TFSA out of fear it would knock you off this benefit, that fear is misplaced. TFSA withdrawals are protected. C. How do they get it? You must apply. This is not automatic. Here is the single most important sentence in this entire video, so listen closely. Unlike your regular OAS pension, which often starts automatically once Service Canada has your information on file, the Allowance for the Survivor is never automatic. Nobody signs you up. You have to apply in writing either online or by mail, and if you don't, that money simply does not come. The form you need is called the ISP 3008, Application for the Allowance or Allowance for the Survivor. This is the same form used for both the Survivor benefit and the Spousal Allowance program, which I'll cover in a moment. Here's how you actually get this done, step by step. First, if you're comfortable online, sign in or register for My Service Canada account, often called MSCA, at canada.ca. Once you're in, you can find the allowance section under Old Age Security and begin your application directly through the portal. This is usually the fastest route. Second, if you'd rather do this on paper, or if you don't have reliable internet access, you can download and print the ISP 3008 form, or call Service Canada at 1-800-277-9914 to have a paper copy mailed to you. Third, gather your documents before you start. You'll want your social insurance number, your spouse's death certificate, proof of your marital status, and if Service Canada requests it, a recent notice of assessment from CRA showing your income, or the statement of income section if you haven't yet filed taxes for the relevant year. Fourth, complete the form fully. Missing information is the number one reason applications get bounced back, adding months of delay to money you need now. Fifth, mail your completed application to the Service Canada office listed on the form, or submit through MSCA if you applied online. And finally, set up direct deposit. You can do this through MSCA under Profile, then Manage My Payment Destination, or by calling Service Canada. Direct deposit avoids mailing delays and gets money into your account faster than waiting on a check. One more thing seniors need to know. You can apply for the Allowance for the Survivor up to 11 months before your 60th birthday. So if you're approaching 60 and you're recently widowed, don't wait until the day you turn 60 to start this process. Get ahead of it. I know some of you are asking, will applying for this affect my GIS or my CPP survivor benefit down the road? The honest answer is no. This allowance runs on its own track. It doesn't reduce or interfere with your CPP survivor pension. And once you turn 65, this benefit stops and you transition into applying for regular OAS and GIS if you qualify. There's no penalty, no clawback, and no reason to hesitate out of fear it will hurt your other benefits. Section 3. The allowance for spouses. A. What is it? The allowance for couples where one partner is 60 to 64 inches. Now let's talk about the second program, because this one applies to a completely different situation, and I don't want anyone watching to think it's the same thing. The allowance, sometimes just called the allowance without "for the survivor" attached, is for couples where one spouse is already 65 or older and receiving both OAS and GIS, but the other spouse is between 60 and 64 years old. If that younger spouse has low income or the couple's combined income is low, the younger spouse can apply for their own monthly payment. Think about a retired couple in British Columbia. The husband is 66, already collecting OAS and GIS. The wife just turned 61, she's not working, and the household is stretching every dollar. In that exact situation, the wife could be eligible for the allowance in her own name, on top of what her husband already receives. B, what is it worth? Up to $1,411 per month, tax-free. Right now, the maximum monthly allowance payment sits at roughly $1,411. Just like the survivor benefit, this is completely tax-free and paid monthly, right up until the younger spouse turns 65 and transitions into their own OAS pension. This amount is based on the couple's combined annual net income. Current figures show that if the couple's combined income is under roughly $41,000 a year, the younger spouse is likely looking at close to that maximum payment. Just like the survivor benefit, this threshold gets reviewed and adjusted every quarter, so I always recommend checking the current numbers directly on the allowance page at canada.ca before you apply, or asking Service Canada to confirm exactly where your household stands. C, how do they get it? Same form, ISP 3008. The application process here mirrors what I just walked you through for the survivor benefit. You use the same ISP 3008 form, either through your My Service Canada account online or by mailing in the paper version. You'll need proof of your marital status, your social insurance number, and income documentation for both you and your spouse, since this benefit is calculated on combined household income, not just your own. The critical thing to remember is the same critical thing from before. This is not automatic. Even if your spouse is already receiving OAS and GIS and Service Canada has your household on file, they will not automatically start sending you the allowance. You have to submit that application yourself. Section 4, the income test in line 2, 3600, why this trips people up. I want to spend a minute on something that confuses a lot of seniors, and that's how Service Canada actually calculates your income for these benefits. When you file your tax return every year, line 23600 on your T1 return is your net income. This is your total income after certain deductions, and it's the number CRA and Service Canada both lean on heavily when determining eligibility for income-tested benefits like GIS, the allowance, and the allowance for the survivor. This is exactly why filing your taxes every single year matters, even if you had little or no income. Service Canada uses your previous year's tax return to determine your payment amount for the benefit year ahead. If you don't file, they have no income information to work with, and your payment can be delayed or reduced simply because the paperwork trail is missing, not because you're ineligible. Here's a scenario. Say you're a widow in Ontario, 62 years old, and your net income last year from a small part-time job and some investment interest worked out to $22,000. Because that falls under the current threshold, you'd likely be looking at a payment close to the maximum. But if that same widow's net income was $35,000, her allowance for the survivor payment would be significantly reduced, or in some cases eliminated entirely because she's exceeded the cutoff. This is also why RRSP and RRIF withdrawals matter so much for people approaching or already collecting these benefits. Withdrawing a large lump sum from your RRIF in a single year can spike your net income on line 23,600 and knock your allowance payment down, or cut it off completely for that benefit year. If you're close to the income threshold, it's worth thinking carefully before making a large RRIF withdrawal, and if you're unsure how a withdrawal will affect your eligibility, a conversation with a financial advisor or a call to Service Canada before you withdraw can save you from an unpleasant surprise. Section 5, common mistakes that delay or block your payment. 5 mistakes that delay your application. Before we wrap up, I want to walk through the mistakes I see over and over again, because avoiding these will save you months of frustration. Mistake number 1, waiting too long to apply. Service Canada can pay retroactive benefits, but only up to 12 months before your application date. If you were eligible for 2 years and never applied, you only recover 1 year of missed payments. That's real money left on the table permanently. Apply as soon as you know you're eligible. Mistake number 2, incomplete documentation. If you don't include proof of your spouse's death or your marital status documentation, your application gets sent back and the clock resets. Mistake number 3, not filing taxes. I mentioned this already, but it's worth repeating. If you don't file a tax return, Service Canada has no current income figure to calculate your payment, and this can delay or interrupt your benefit. Mistake number 4, assuming this is the same as GIS. It's not. GIS is for people 65 and older who already receive OAS. The allowance programs are specifically for the 60 to 64 age group. Applying for the wrong program or assuming you're covered under GIS when you're not old enough yet wastes time you don't have. Mistake number 5, not updating Service Canada when your situation changes. If you remarry, if you move, if your income changes significantly, or if your banking information changes, you need to update Service Canada right away through MSCA or by phone. Otherwise, you risk overpayments that you'll eventually have to pay back or interruptions in your deposits. Section 6, the heartfelt truth. I want to say something to you directly before we close this out. This is not charity. This is not a handout. This money comes from tax dollars that you and people like you paid into this country for decades. The allowance and the allowance for the survivor exist because the government recognized that losing a spouse or living on one income between 60 and 64 creates real financial hardship. This program was built specifically to protect you during that gap. You have every right to apply for what you've earned. If you're watching this and you know someone, a neighbor, a sister, a friend from church, anyone who's widowed and in that 60 to 64 age range, please don't keep this to yourself. Share this video with them today. There is a very real chance that person has no idea this money exists, and every month they wait is a month of income they can never fully get back. So here's your action step. If you're 60 to 64 and your spouse has passed away, or your spouse is already collecting OAS and GIS while you're not yet 65, go to my Service Canada account today or call Service Canada at 1-800-277-9914 and request Form ISP 3008. Don't wait for someone else to tell you about this again. Start the application this week. If this video helped you, do 3 things for me. Drop a comment below and tell me what province you're watching from. I read every single one. Share this video with a widowed or low-income senior friend who needs to see it. And if you haven't already, subscribe to this channel because Service Canada and CRA update these rules constantly, and I'll be here breaking down every single change that affects your benefits, your taxes, and your money. I'm John AJ. Take care of yourselves, and I'll see you in the next one.